So today we'll look at professional liability and a particular type of liability issue, asbestos, and look at a couple articles, and that should finish us up for commercial insurance other than getting workers' comp. So I'm on about page 44 of the class notes. Professional liability insurance, also known as errors and omissions insurance. This is the insurance for highly trained professionals when they make mistakes, when they cause harm or damage, and it's specifically related to their particular professional training, their skills. It's going to cover malpractice, errors, mistakes, and there can be some dispute whether something's actually happened or not. We'll see this especially when we see asbestos. This is related to asbestos. But you've got this coverage, and you make a mistake, and the mistake is discovered during that coverage period. That's pretty straightforward, right? You have surgery, and you make a mistake in the surgery, and the person is injured or dies. It all happens in the same period, so that's pretty straightforward. Where it gets tricky is, and we'll see it. This is true for medical malpractice. It's true for the asbestos issue. It's that someone's exposed to something, they're exposed to your treatment, and it may be years before they discover there was damage. So a doctor who gives, that works with pregnant women and, gives birth and does C-sections and those type of things, he may do something giving birth to that baby that causes harm to the baby that you don't discover until the child is 5 or 6 years old. We're going to see with asbestos, people are exposed to asbestos, and then 30 years later, they have cancer. And then you got to figure out, well, was the cancer caused to the asbestos? You say, yeah, it was caused to asbestos, but he had 3 different jobs. Well, which job gave him the exposure to asbestos that gave him the cancer? So this concept of an exposure versus a manifestation. Exposure is when they actually were harmed. Manifestations when they discover they were harmed. So this is a huge issue with this type of insurance. So most policies, you've got to have the policy when it is discovered, and so we'll talk about this concept. Let's look at this concept of a retroactive date. So it's exposure must have occurred after a retroactive date, and a manifestation has to happen during the policies. So essentially what they're saying is, if you did surgery 10 years ago, and that surgery caused harm, and we discover the harm today, if you didn't have a policy that covers you 10 years ago, you're not covered. If your policy started 9 years ago, you're not covered. Now, you might say, wow, this can be really dangerous if you change insurance, but most policies, I talked to a couple of doctors, they say it's really not that big of a deal. Doctors are very careful to make sure that their retroactive date goes back to the first day they ever provided any services at all. So it's something doctors are definitely very cautious about. It's something they obviously talk very carefully with their insurance providers. And this is a type of insurance policy that reputation is a huge deal, because even if you're found not guilty, the fact that you go to court and people hear you in court and they see you, it can do huge damage to your practice. Now this brings us up to this whole concept of tort reform, and especially medical malpractice reform. And so when you hear tort reform, what does it mean? Here's some articles back during the time where medical malpractice was a huge deal. About 20 years ago, it was just, in fact, George Bush, it was a big part of his presidency. A lot of people are talking about, we need medical malpractice reform. So just to give you some sense of what they're talking about back then, and this is not a big deal today, so it seems like these reforms must have worked. But limits on contingency fees paid to attorneys, that was a big part of this, is one of the reasons why there's so many lawsuits in the U.S. is that attorneys are making a lot of money on this. Putting time limits on when you can file your lawsuits, putting limits on punitive damages. Now, I have a little bit of issue of that. We talked last class about McDonald's and what they did with the hot coffee. You know, if you limit punitive damages to a point where it really doesn't cause a plaintiff serious consequence, you know, if it's really no big deal to them, then it's really not much of a punitive damage. So I think the punitive damage needs to reflect the seriousness of the negligence, and also be enough that really does keep them from doing that again. Because you saw with McDonald's, with the hot coffee, this is a problem they had repeatedly, and they just decided, no, it's easier just to pay a few $1,000s to people that get harmed and not fix our process. But that's part of it. Let's limit punitive damages. It deducts insurance payments from damages awards. So that was something I talked about under umbrella. If people can sue you for, you know, if you have a $2 million umbrella policy, they're going to sue you for $2 million plus another $2 million because that's your net worth, and you know you have no protection. But here, it gives you some protection that, you know, they decide what they're going to sue you, and they're not going to look at your net worth. They're not going to pick how much they're going to sue you based on your net worth, and so your insurance actually does cover you. Limits the defendant's liability to his or her culpability. Now, we saw that with McDonald's. They said that McDonald's was 80% culpable and the woman was 20%, so it reduced how much she got by 20%. Permits defendants to make periodic payments rather than lump sums, so we don't turn punitive damages and lawsuits into this lottery where you get this huge payoff. Limits contingency fees. You know, limiting the lawyers is a big part of this, which means obviously personal injury lawyers fight against tort reform pretty hard. So this was all coming up because malpractice insurance premiums were skyrocketing. They often exceed $100,000 per year. Physicians in states without malpractice reforms are cutting back on their services, moving to other states, retiring. So it was having a huge impact on supply and demand of medical services. We talked about this cap on non-economic damages, so not just punitive damages, but even pain and suffering caps. So yeah, doctors are refusing to perform certain services. You have to file the malpractice suit in the county where the alleged injury happened. So here's something that has been a big issue with malpractice reform, is lawyers would find the jurisdiction that gave the best outcomes. So there's certain jurisdictions in the U.S. where you just want to sue because their juries tend to be very pro lawsuit. They tend to always side with the plaintiff. So what you do is you go to that jurisdiction, you find one person in that jurisdiction that has ever used this physician. If you can find one person, and then you do this class action lawsuit, and you bring people from throughout the entire country, and you bring them all to this one jurisdiction because you have this one person in the class action who's in that jurisdiction. And so some tort reform said, hey, you've got to go to the jurisdiction where this thing happened. You can't have just one person and bring thousands of people in. That obviously makes it much more difficult for the lawyers. Insurers are lowering their limits. Some are doing a claims made policy, which is that thing of no retroaction at all. We're just covering you for those things where you both did the surgery and it was discovered all in the same period. So if you did the surgery 10 years ago and our policy started this year, you're getting nothing but what was both surgery and discovered this year. So premiums keep going up. It's a big issue. People can't find prenatal care. I mean, that's a huge one, right? Because with prenatal care, you know, for a doctor there, they are essentially exposed for the entire life of their patient. Because if anything discovered, you can always go back and say, well, you know, the kid has this learning disability because how the doctor did this or that, and yeah, that can be huge. You can see it's by state by state. Each state has their own thing going on, so it's it was a huge issue back then. I have not heard it in the news recently, or I know talking to my doctor friends, malpractice insurance is a big deal. In my life insurance class, when we talk about health insurance, we talk about it some there. That there is some issue still there. It does raise the cost definitely of healthcare, but it looks like these type of tort reform, um, these approaches seem to have put some limits on the cost of medical malpractice, so that the medical community could function again. For professional liability, do you need that? So you're going to be a finance person, you're going to be an actuary, you have special skills. If you're working in corporate finance, if you're an actuary in an insurance company, you'll have some coverage just from the fact that your company is going to protect you. So what you do for the company is essentially the company's going to be sued, not you individually. There are things you can do, especially in, well, actuaries and finance both. If you are involved in retirement plans, healthcare plans, those type of things, then you do have personal liability. I was responsible for USA's 401k plan and pension plan, so about, at the time, it was about $7 billion in assets, and if I'd made a mistake, and I was making a lot of changes to those plans at the time, if I'd done something that was negligent, I could have been personally sued, and there was $7 billion sitting there that the employees of USAA, if I'd made a mistake, they could sue me. So USAA provided me insurance. It was only $25 million, which always seemed a little small to me, but $25 million. But I always listened to that because I was a fiduciary. I was making decisions. I was making a lot of decisions, and decisions that some employees absolutely hated. We changed the 401k plan so that all the equity options were indexed. We moved from active management to index, and boy, there were some employees that hated that. But didn't really give them an opportunity to sue because the data was overwhelming, so that was a very good decision. But it could be, they could have seen the manager I fired. Maybe over the next 5 years, they were up 20%, and the index fund was only up 15%, and they want to make an argument. I still think, with all the data I had on my side, that I could show that it wasn't negligent, it was just bad luck. But still, I think about that, and now I even wonder more. I left USAA, somewhere to sue me now and say, wow, you made a decision back in 2008, 2007, and boy, I'm suffering from that today. Could they still find me and sue me? So those are things to think about. So anything you're doing where you have expert skill, you should think about that. Do I have a fiduciary responsibility? Am I making decisions that could be considered negligent, could harm someone financially, and that they could sue me personally? Or does my employer shield me and protect me? Ask those type of questions, especially as you move up as a decision maker and have more decisions that are more impactful. At least ask the question and make sure you have the coverage. I remember sitting on the board when the insurance people came in as the board of our investment company. When the insurance guy came in to talk about their particular professional liability coverage, errors and omissions coverage, boy, that was the first time in all the board meetings where they really got animated and got involved. It was like the one topic everybody was interested in, everybody was talking about. On all the other topics, there was one or two that were interested, and the others weren't all that interested. But when we got to that, it was something they were very, very focused in on. All right, so let's talk about just general liability, general just negligence. When you buy insurance here, it protects you against liability arising out of their premises or operations on or off the premises. It covers for bodily injury and property damage, obviously. It could be on the premises, so your customer slips on your sidewalk, or it could be due to their operations. Obviously, construction companies have huge commercial general liability issues. And that's something you definitely, if you're hiring a contractor, especially if you're going to hire subcontractors and they're going to be doing something pretty major on your property. Boy, you want to ask, hey, what is your insurance coverage? What if one of your workers gets injured on my property? What if you do major damage to my neighbor's house? What coverage do you have? And you should be really careful. Some of these contractors, they're small mom and pop types of businesses, and they don't always spend the money that they should protecting themselves. And then they may have the insurance, but they're subcontractors, and how do they handle that? So these are dangerous things that they're doing, and the insurance is expensive. So are you dealing with a legitimate company that is buying the insurance they should have? You have defective products or services. It doesn't cover recalls, so obviously major auto manufacturers, even they can show it's negligence that caused that. You think about Boeing with its new Dreamliner and all the issues they're having with that. Those are not insured. Product defects where it's it's part of the manufacturing process and there's something with, so we're actually talking about a product. You've got 1,000 products and one of them was constructed incorrectly and caused damage. That can be a liability that this type of insurance will cover. And then personal advertising. These are all these negligent things that we do: false arrest, malicious prosecution, wrongful eviction, wrongful entry, libel or slander, violations of privacy. False arrest, you might say, well, how do you get false arrest? But YouTube, it's always interests me in teaching this class. I'm always finding YouTubes that are really interesting. And there was one, it was a prank where these people were calling fast food outlets and telling the manager that they were in the FBI or in the police, and telling them that one of their employees had done something serious and that they need to hold this employee for them until they showed up. They were on the way and they were really worried this person was going away. And so these managers would actually lock their employee in some room and guard them. And they would have them do things like strip searches and other kind of things were just absolutely ridiculous. And this manager would believe them. And so, it's possible if a store says, hey, we think you've been stealing from us and we're going to lock you up until the police comes, you have a right now to sue. That is a liability, a general liability. So this also covers medical payments, pays medical bills for accidents on or next to the premises arising out of the insured's operations. Gets first aid at the time of accident. It's similar to what we saw with the homeowners, where it covers the medical payments so that you treat the person before you figure out who's liable. So essentially what it's saying is, hey, get medical attention, get the person treated. That is not an admission of guilt. It's not an admission of liability that you were negligent, and we'll cover you for that. And then if later you're discovered that you're not negligent, this policy will cover you for those medical payments. If you discover that you are negligent, then obviously this policy covers you as a liability coverage. So related to this whole idea of professional liability and other types of lawsuits, so we're talking about negligence. There's an article that I have used in this class, but it's getting dated. It's 15 years old. And this is one of those things, again, where, boy, I wish I could find an updated article, but I just can't find one. This is a really, really good one. It comes from Tort Reform, which, if you're an actuary major, Tort Reform and Tillinghast, and there's a big merger. Tort Reform and Tillinghast, boy, what a great actuarial firm. If I were an actuary, boy, my career goal would be to eventually work for one of these major actuarial consulting firms, because, boy, they have some really impressive people. But this is a study they did, so I apologize that it's so old. If they would update it, I keep looking and looking for them to update it. They may not update it because tort reform was a huge issue 15, 20 years ago, but it's not today. So even though it's probably still much higher in the U.S. than the rest of the world, is not as big of an issue as it was back then. And so the point of the article is just to show how much tort costs us in the U.S. And at this time it was, we're getting to about probably $1,000 per person in the United States. So it's costing you about $1,000 a year. We have such a tortuous in society. You can certainly ask the question, why are lawsuits so much more dominant in the United States than in any other country? Why do we have more lawyers per capita than any other country? It probably has to do with our tradition, our legal system, the way we're set up, what we believe about personal responsibility. There's good reasons and bad reasons. Obviously, there's the good reasons is we want people to take responsibility for their own actions. The bad reason is there are incentives for lawyers to really push this, and they get compensated very, very well. We've talked about the impacts on our society of this that are just things we can no longer do. When I was a kid, the playgrounds had these, what we call these merry-go-round things. I forget exactly what they're called, but boy, those things were fun. But they were incredibly dangerous. I can remember sometimes being on that thinking I was about to die. You get some strong people pushing that around. You're going really fast, and boy, they could be dangerous. And those things are not on playgrounds. I look at playgrounds today, and they just, boy, I've taken, seen some kids playing at playgrounds, like on school grounds and other places, and I just look and say, boy, that is the most boring playground. But that's what's happened. That's the impact on our society of things we can no longer do because of lawsuits. Is that good or bad? There's fewer people getting injured, but then there's fewer people having really a lot of fun. So it's increased dramatically. It's grown much faster than our economy. It's exceeded the growth of GDP by an average of 2 to 3 percentage points back at the time this article was written. Here's a picture that shows you of our economy growth versus tort growth. So where is it coming from? So obviously this has changed, but this really shows you at the time this article was written and the time that those other articles I showed you on tort reform was written, medical malpractice was the big one. They were growing really fast, and so that was the one everybody was focused on. That was costing us about $100 per person. So you say, well, that's not much, $100, but you think about it with medical costs and health insurance and an extra $100, yeah, this stuff is starting to add up. So again, part of it's our society, the way we're set up. The largest single contributor to tort was the asbestos. We'll talk about asbestos. So medical malpractice was the one that was hitting the news, was getting the most attention. Asbestos was the one that was rising and coming up and catching up with medical malpractice and becoming the big one. So those are the two. At the time this article was written, medical malpractice and asbestos were the two biggest ones. Those are the two I want to talk about, similar to what we did with mold and storm surge, just to let you see an issue that was really hitting this industry, why it was important, what kind of issues it was causing. All right, so reports of class action lawsuits by groups of insureds. That was a big issue. It's still a big issue today, these class action lawsuits. It allows lawyers to make a lot of money and have an incentive to do a lawsuit, even though each one of their claimants may get very little money. There's been some class action lawsuits when the individual claimants might get $10, $15. I mean, it's just nothing. They almost don't care. But when you have thousands of them together, the lawyer can make hundreds of thousands of dollars, and they have an incentive. So class action lawsuits is a big part of this. You'll see, especially with asbestos, that's a big issue. There have been shifts in the types of liabilities over time. The shift they talk about here is the shift from individuals suing individuals to groups in class actions. So there was a time where the biggest lawsuits were car accidents, and that's still true in some states. California has a serious issue where a large percentage of their car accidents end up in courts with lawsuits. That's not true in Texas. In Texas, most car accidents are just settled by the insurance companies without lawyers involved. But in some states, individuals suing individuals is still a big deal. But we saw this big shift from individuals suing individuals to class action lawsuits and in suing entities, businesses. Claims against pharmaceutical companies, certain drugs, food establishments. Those are claims that we have seen some on the pharmaceutical side, definitely. Food establishments getting sued for obesity-related injuries, that still has not happened. I don't think there's been a lawsuit yet that has been effective on that. But obviously the lawyers will keep trying. We certainly have seen it with tobacco and other products. As we just saw in the article, states have been pushing tort reform, and we saw the kind of things that mean tort reform. So a tort, as we said, is just a wrongful act of one person versus another. It's a breach, not of contract. So it's other than a breach of contract, but it's a breach really of your responsibility as a member of society. And there has to be some form of damages, or you get some kind of injunction. So you must have suffered some loss, or the court will say, I'm going to impose an injunction. I'm going to stop the person from doing this. You may not get money. So if your neighbor's building something that's an eyesore, you may not get money, but the court will at least stop them from doing that, put an injunction in place. And as I said, they're looking at just the direct costs, like costs that are easy to measure, but there's a lot of other costs to this system. There's some that are benefits, some that are negative. The benefits are things that we have a safer society. The negatives are we're not able to do things that used to be a lot of fun. We just can't do them anymore. Now this article has some terminology in it that I think is important to understand. And so we'll use it a little bit as a kind of terminology and how this terminology works. So you've got commercial and personal torts. So commercial is torts alleged against business, and that includes medical malpractice. Personal torts is individuals excluding medical malpractice. So a doctor is an individual, but that's part of commercial. So most of the personal torts are automobile accidents, which makes sense. And what they're trying to show you is that growth in the personal torts is not nearly as high as the growth in the commercial torts, especially since 1998. And that's where the asbestos and medical malpractice are really showing a huge increase. So why did they talk about the cost of a litigious society? So you have the losses. These are the direct payments of the person who's been harmed. You have defense costs, and then there's administrative expenses, those things that businesses have that they have to keep the system going. Now here's a term right here, incurred basis. So put that into your notes. What do we mean by incurred? So incurred is paid in cash plus the change in reserves. So put that in your definition. An incurred loss is a loss paid, and we'll see this when we look at the Schedule P later in the class. You have your paid losses plus the change in reserve. The reserve is your estimate for what you will ultimately pay in losses, which might be over the next 12 months or it could be over the next 20 years. So that's incurred, and we'll see that's really important to make that distinction. So the reserves are estimates, and so when you have estimates, there's also always room for error. So there could be errors. We're going to see that when we look at Schedule P, how big those errors are. I don't know if you remember back when we were reading the Warren Buffett annual report. He talked about discounting reserves and how his sense was reserves are way too long. They were way too low. They were way underestimated, and that there's no reason to discount reserves given that they're so low. We'll look when we look at a couple of companies. We'll look at probably Allstate and look at their Schedule P, and you'll see Allstate's Schedule P actually is pretty conservative. They tend to reserve more than they need, not less than they need. But these particular ones, especially medical malpractice and asbestos, that's when the estimates can be very far off. Asbestos, especially, the reserves for asbestos were billions of dollars too low and had to be beefed up. A few other definitions, ALI and ULI. So ALI is allocated loss adjustment expenses. These are those direct costs for defense, investigation. Those are these costs that you know these are directly related to this particular claim. ULI is it's unallocated, but to me what it is, it's those other costs. It's the boss over all the lawyers whose time's getting allocated out to different places. It's those things that are not directly related. So administrative expenses reflect expenses other than defense costs incurred. So that's just, those staff type of expenses that you have, but you can't directly tie them just to this because they also relate to other things the business is doing. It's an interesting article. It shows you, as from an actuarial standpoint, it shows you the kind of things that actuarial firms, what the kind of research that they do, and really asking the question, hey, do we need reform? Do we need to fix what we're doing here, given that this is directly impacting consumers, it's making their lives more expensive? Is it worth it? Is it worth it to spend extra $1,000 so that we can have this litigious society, because the consumer gets protection from that? If they're harmed, they have the ability to get their losses covered, but then it's costing us $1,000 per person, and who knows what it is today. Maybe it's $1,500, $2,000 a person. Is it worth it to us to expend that cost when someone in Europe, maybe it's only $200 a person, but then they don't have all the protections we have? So those are the kind of things the actuarial firms are asking so that they can influence legislators as they're making decisions on tort reform. They did exclude certain costs, some that are just not very measurable. So we talk in my life insurance class that because of medical malpractice, doctors may order a lot of extra tests, what we call defensive medicine. And that certainly adds cost to the system. If you look at it in total, all these extra costs may be costing us millions of dollars, and it might every once in a while save a life. But if you looked at all the millions of dollars we're spending on all those extra tests, if we spent that money somewhere else, we could probably save 10 times more lives. But instead we're spending it here on extra tests because of medical malpractice. And so, when you really look at it, it's hard to look at it from a societal standpoint because it's hard to know. If people are doing extra tests, every once in a while they will discover someone who has something that they can treat that they would not have discovered, but most of the time it's a waste of money. That's a big cost to our litigious society, and yet it's not part of their costs that they're covering here. So that $1,000 per person, maybe add another 10%, 20%. And then, as I mentioned, entire industries have disappeared because of product liability costs. That people just say, hey, it's just not worth it to be in this business. And they have some interesting tables, give you some history. The history unfortunately stops at 2003. But as we talked about the combined ratio, they actually have that in there. So they show the earned premium. We'll talk about earned versus written premium, what that means. There's the loss ratio. The loss ratio is losses plus loss adjusted expenses divided by premiums. The expense ratio is your expenses divided by premiums. And then the combined ratio. And so here you can see for liability insurance, you can see the loss ratios. You can see the last several years, the combined ratio. Remember, if it's above 100, they're losing money. If it's below 100, they're making money. And look back some of these years, 128%. Now, granted, in 1985, interest rates were very, very high, so they were making a lot of money on their investment portfolio, but they weren't making that much. And you take $100 in premiums and you spend $128 in losses, you have some big, you're not going to make much money that way. Now that 28, this 128, maybe only 70 of that is in cash, and the other 58 is in reserve, so they don't pay it in that year. So there is some time value of money going on. Remember, insurance reserves are not discounted. So there's a lot more going on here, but it does show you how unprofitable this liability business has been and what the medical malpractice has been. They fixed it somewhat coming in, but also interest rates have been falling during that time. And they give you some numbers as well. So interesting article, very actuarial focus, using some of the terms that we've seen previously. So hopefully you'll get comfortable with these terms and know how to use them. I do encourage you, if you're going to interview with an insurance company, that you get their annual, their statutory annual blanks, just like we're going to do. We'll see it later in the class when we look at Allstate, and look at things like the historical combined ratio. See how profitable they've been. Where are they profitable? Where are they not profitable? And I'll show you when we look through the annual report. If you look at that before you interview with a job, for a job in one of these companies, well, you'll have a huge advantage in understanding what kind of business that you're getting into, and also what businesses are they in. Are they in homeowners? Are they in auto insurance? Are they in medical malpractice? And are they in workers' comp? And then how profitable are they? I mean, just think in the interview, you say, hey, I notice your combined ratios are well below 100 the last few years. What's your secret for being so profitable? That's an impressive thing for an undergraduate student to say in an interview. All right, so that's that Tort article. So let's talk about asbestos. All right, so asbestos special issue hasn't been in the news recently, although the most recent was Warren Buffett buying the asbestos liabilities from one of the major insurance companies, a company called CNA. Warren Buffett buying that from CNA, but doing it in a way where he's almost bound to make money. So we talked about that in his annual report. He did it in a way where if things really got bad, he would come out okay. He had the right to go back and push some of this back on them. So it was an interesting transaction. But even Warren Buffett has decided to get in this asbestos side. Maybe you've seen something like this. Mesothelioma. It's a special type of cancer that's directly related to exposure to asbestos. So here's an actual advertisement I found with a 1-800 number. I should call that number, see if it's still operating. But they come out and say, hey, if you've had this kind of cancer, you might have been exposed to asbestos, and you might have the right to recovery against the manufacturers of asbestos. Now, obviously, the manufacturers of asbestos have all gone out of business. But they had insurance companies that were insuring them, and these companies and their insurers have set up trusts to pay these claims, and these trusts still have money. So if you call and can prove that you have this cancer and you can find some exposure, and then the question is going to be which exposure is the one that's going to pay, and you might, it might be a guess, or you might find the one that's going to pay is the one that still has money. So there is a statute of limitations, so there is a time limit on this, so you do need to move. If you have this cancer, that alone is not grounds for damages. In order to establish a claim, it must be established that you have been exposed to a specific asbestos product at a specific location. So you don't have to prove that's what gave you the cancer, but you do have to prove that you had exposure there. If you do not remember the name of the manufacturer of the particular asbestos product that was used, our experts can find that out for you. So what we're discovering with this cancer now, it's gotten a little ridiculous because they have found asbestos in like public schools and places like an old Walmart. And so there have been people trying to sue that probably did not get this cancer from that particular exposure, but a public school or a Walmart has money, and so people want to sue them. But what they discovered is asbestos. This is not something where you're casually exposed to it. These are people that are working right in the middle of it. So the people who have these claims, they really know they have these claims. They were working in asbestos. The dust was flying. They were putting it in people's attics as insulation. They knew they had the exposures. So so the people who have this cancer will probably remember a time when they were exposed. But there have been some lawyers that have tried to expand this out to other groups for just very casual exposure to asbestos, mainly because there's more money there. Asbestos specifically has been brought up as an issue needing reform specifically. Why? And we'll see that when we look at this main article we're going to go into. But really it comes down to, what are the incentives for the liability lawsuits? Why are the lawyers pushing this? Is it because people really have been harmed and they need to be compensated? Or has this been a place where lawyers have found that the courts are just deciding on claims of very little evidence, even medical evidence, and are giving these huge jury rewards? So 2 decades ago, analysts predicting that litigation, which it costs about $1 billion, would run to be $38 billion. It's already passed $54 billion, and it's likely to be $210 billion. Sounds a lot like the mold, right? Almost the exact same type of numbers when it comes to the frequency and severity of these claims. Claims for the cancer have stayed roughly constant, but suits for this is where we're going to talk about non-malignancies. So lawyers have found a way to sue to get people money even though they have no serious medical or health issues. Again, very similar to the mold issue. So in many of these cases, plaintiffs show no evidence of injury. So Forbes magazine said asbestos defendants are very likely now paying compensation for every occupational disease known to man. Incipient or marginal asbestos from an X-ray bears at least a superficial resemblance to more than 130 other lung inflammations, including scores caused by various airborne particles. But the potential of a huge payday impels a trial bar to find clients, irrespective of validity of their claims. Even some plaintiffs now recognize how they are being used. Last year, more than 25 litigants sued their lawyers. I love that. You sue your lawyer, charging that the latter viewed the clients as mere inventory that could be generate enormous legal fees with relatively little effort. Again, that's that class action lawsuit. You get so many people in the class action lawsuit that the defendant just cannot possibly afford to check every single one of them. So it's just this mass of people. So all they can do is try to defend themselves against the mass, because they can't afford to go one by one by one by one by one. And boy, it's just opening up to these frivolous lawsuits. 2/3 of the dollars paid went to those cases, those people without any medical conditions. Most of the plaintiffs were not sick in any meaningful sense. Another problem is that the search for deep corporate pockets hits companies with no responsibility. That's what I was just talking about. You say, okay, the people who actually produce asbestos, they're all out of business. They went insolvent. Whom else can we sue? So 6 of every $10 are coming from these groups that didn't produce asbestos. They just happen to have asbestos in their attics. To show negligence, you'd have to somehow show that they were negligent. If they had no idea that this stuff was dangerous, it's a little bit of a stretch to sue them. So you have to say they were negligent, and that's one thing you have to prove. So it's interesting to see how these are being presented to the courts. Strategies include insisting on proof of injury, ensuring the reliability of medical evidence, and limiting punitive damages. So proof that someone who's actually had some medical injury with good medical evidence, and we'll see in the other article that that's a big deal, that there was somewhat fraudulent. Lawyers were hiring people that they knew would give them good reports. It's similar to what we saw in storm surge, where State Farm, how much was storm surge and how much was wind, where you find an engineering firm that will give you a decision you like. That's kind of what was going on here, somewhat going on here with asbestos. You find people that will give you the results you want, and you take that to court. And courts were not challenging that medical evidence, and in fact, not even allowing that, even evidence against that, to be presented in court. And then, as we saw before, limiting punitive damages. So one last article on asbestos. This one, I really like this article. It was written by the Academy of Actuaries. This is interesting. The Academy of Actuaries has a mass tort subcommittee. Isn't that interesting? So, torts is a huge issue for them. So let's just walk through this article because I think it will give you some perspective on the frustration people have had with this particular issue. The Wall Street Journal has come out with articles on this, editorials on this. It's been somewhat of an example of the need for tort reform in the United States. But a little background: asbestos was widely used in thousands of products for decades. It's still used in some products in the U.S. At least 27 million people had significant occupational exposure. Now think about that number. There's about 350 million people in the United States. Almost 1 out of 10 people in the United States had significant occupational exposure. Shipbuilding, construction, and tens of millions were exposed in other industries. So that's, we're talking, probably most of us know someone who's had this exposure. It's conclusively linked to several medical conditions ranging from pleural changes with no signs of impairment to fatal malignant diseases, including lung cancer and mesothelioma. Average latency periods, and this is really, really critical, why this is such a difficult issue for the insurance industry. Latency periods vary, ranging from 10 to 50 years. So you could have been exposed in 1972, and in 2022 is when you discover you have cancer. 50 years. So, we're still seeing new claims coming today because it takes so long to discover that you have it. An individual victim's disease is typically attributed to exposure to multiple products over decades and is virtually impossible to isolate specific exposure. A single claimant typically files suit against 60 or more defendants because you just don't know where do you get exposed. Thousands of companies have been named as defendants. Some were major producers, others were more peripheral involvement, and obviously we've seen here 6 out of 10 of the more recent claims have been peripheral involvement. RAND concluded that at least 730,000 asbestos claimants filed lawsuits against more than 8,400 defendants. Report states that the number of claims filed annually increased sharply beginning in the mid to late 1990s. Claimants with no malignant injuries account for most of the growth. So the non-malignant injuries, that's where it's coming from. And some evidence suggests that most non-malignant claimants are currently unimpaired. According to RAND study, at least half of the $70 billion asbestos claims paid by defendants and their insurers related to non-malignant conditions. What else have we seen? More efforts to direct scarce resources to the sick claimants. So we talked a little bit about that with uninsured motorist insurance for auto insurance. Is there a way we can change the rules so the really harmed, the people that are truly harmed, they get money, and that the people who really aren't that harmed, we get them out of the system. Maybe we find a way to pay them without getting lawyers involved. But the system is set up so the sickest people, they don't get paid because those are the ones that the defendants fight. And the least sick, they get paid because of class action lawsuits, and there's so many people in them. Those claims get paid because each one of them is too small to fight. So can we find a way that we get this money to the sickest people? There's a decrease in claim filings for the less severe medical conditions, so it looks like there's been some work there. And then starting to actually challenge the most fraudulent claims. That's one thing the courts weren't doing, but now it's started to do. This Johns Manville Corporation, that was the main culprit, the firm that was the biggest producer of asbestos, the largest supplier in the U.S. They filed for bankruptcy in '82. They set up this trust, which was formed to distribute limited assets among current and future asbestos claimants, and they began paying out in 1988. Many believe that the increase in the claims reflects greater medical awareness and diagnosis. So obviously doctors now, when they see mesothelioma, they immediately think asbestos. They may even be telling their patients, hey, you should talk to a lawyer. So you're more likely. You saw the ad I showed you that was in the paper. So how sick you get depends on how exposed you were. So serious asbestos claims might decline in the future, mainly because we don't use asbestos anymore. So lower occupational exposure. While some non-malignant claims are life-threatening, most claimants with non-malignant conditions do not exhibit signs of impairment. Non-malignant claims are generally influenced more by factors affecting litigiousness, such as recruitment efforts through media advertisement and mass screenings. And we'll talk about the mass screenings here. Many of the other major asbestos producers have declared bankruptcy, and they actually give you a list here of all the firms that have gone bankrupt. The asbestos litigation system has been an inefficient mechanism for providing compensation to victims. Defense transactions costs consume roughly 30% of total payments. That's always a big issue with tort reform. Why is it so much of the money goes to the trial lawyers? Are there ways we can process these claims where we don't have to involve lawyers, because that raises the cost 30%, and that 30% is money that cannot go to the people who are injured. If it's going to the lawyers, it cannot go to the injured. And there's other costs in there. So only 41% of the total spending actually went to the person who was harmed. So 59% of the costs in this system are going to someone other than the person who was injured. That means you could double the money to the people who are injured if we could get rid of all these legal costs. As a result of the reforms, asbestos litigation in the states that have the reforms will change to a more individualized process, single plaintiff claims. So again, I can't emphasize enough that those class action lawsuits is a big part of tort reform, because lawyers use that as a way to protect them from scrutiny, because no one wants to look into that many claimants. Tightening restrictions regarding the connection between the plaintiff and the venue of the case. Again, as I said, you can't find a court system that's just going to be so favorable towards you. Find one litigant in that court system and then bring in thousands of class action. So other state reforms relate to innocent sellers. So you can't sue Walmart just because they happen to have asbestos in their attic at some time. Caps on non-economic and punitive damages, just like we saw with the tort reform. Plaintiff journeys in asbestos and these other lawsuits have tended to combine large number of claimants in a single lawsuit, making it difficult and costly for defendants to assess each claimant's case. Many of these claimants have been diagnosed through mass screening programs. We'll see how fraudulent these are. Recent events have cast considerable doubt on these diagnoses. So just let's look at these. Some of these are pretty shocking. A 2004 study called The Diagnosis of Some Physicians in the Questions. In the study, independent radiologists reviewed approximately 500 x-rays that had been previously entered into evidence in asbestos lawsuits and examined by physicians retained by the plaintiff attorneys. The independent radiologists found abnormalities in 4.5% of the films, as compared to the original readings that were 96%. That's these mass screenings, you have to say, was there some incentive for them to find something? Although it's highly unlikely for someone to have both silicosis and asbestosis, it was found that some doctors had diagnosed individual claimants with asbestos at one time and then silicosis at another time. More than 50% of the silica claimants have previously filed asbestos claims with the trust. The Judge Jack. This Judge Jack is she's the one who really came out first and say, hey, well, we got to fix this system. We can't just keep allowing these plaintiffs to win these cases with so little evidence. And her conclusion was these diagnoses were driven neither by health nor justice. They were manufactured for money. Her decision is likely to lead to higher medical evidentiary standards for these claims. You have to say, wow, that seems pretty obvious, right? That you should have medical evidence. But very similar to the mold claims, people saying, well, is there really a health issue here or not? Is it really that serious? The impact of this heightened scrutiny in conjunction with stricter medical criteria adopted by some states in the form of inactive dockets or legislation might lead to fewer mass settlements of pending claims and will likely affect whether and how mass screenings activities are conducted in the future. Um, so here they show the non-underlying cause of underlying cause of death. You can see the huge increase: asbestos and silicosis. The claims filed against these trusts. A lot of information. Here's all the companies that have gone insolvent. The number of bankruptcies. So, you know, it's an interesting study. So again, if you're an actuary, this is what actuaries do. So actuaries don't just do reserves and price products. They have a advocacy to them. They have data no one else has, and they can point out to legislators, to policymakers, hey, we have a problem. This is an issue in our society. We need to address this because we're not. It's not adding value to society. This is something that's being abused, a system that's being abused. And then you get a judge like Judge Jack that says, hey, you know what? We need to step back and really question how we're doing this. And the insurance industry has some influence on making that happen. So what I did in the notes here is I summarized what I just showed you. So here's that tort update article we did. We've covered all of this. The one thing I didn't cover was IBNR, so I want to hit that real carefully, but everything else we covered in that article. So if you want to see a summary of what I did, I forgot to mention when they talk about their tort, they left tobacco settlements out just because they were somewhat of a special case. But let's look at this term IBNR. They mention it quickly in the article. What is IBNR? That's a term you won't hear anywhere else in any other industry other than property casualty insurance. Maybe a little bit in life insurance. With health insurance, they do have an IBNR, but mainly it's property and casualty. And IBNR is incurred but not reported. And that is huge for asbestos insurance because the insurance company, they're liable the second the person was exposed to asbestos and will get cancer. They're not liable when the person discovers they have cancer. From an actuarial standpoint, from an accounting standpoint, they need to set up the reserve when the person was exposed to asbestos that will cause cancer. That could have been in 1972, but the person won't report a claim until 2022. But that means in 1972, they have to set up the reserve. It was incurred, but it wasn't reported. They didn't find out about it. So you can see as an actuary, there's tremendous amount of statistical analysis going on here. Obviously, you're saying, we got to predict something that, man, there's no way we can possibly know. No, obviously, you look at data. So something like asbestos, where the data is just mushrooming, you're getting all this new information, that's going to have a huge impact on your reserves and in particular your IBNR. You're going to say, okay, these many people have reported, but that means there's this massive group that haven't reported. We need to set up liabilities for them. So certain type of products, so auto insurance, homeowners insurance, these type of products do not have an IBNR, or at least not a very significant one at all. But professional liability, general liability, these type of liability products, insurance products, IBNR can be a huge part of the reserve. So just imagine if you're an actuary and that's your job, you're going to be in an entirely different world of statistics, and you'll be learning stuff that is really quite specialized. I find it really fascinatingly interesting. We talked about the medical malpractice, and so we talked about the types of things that are considered tort reform. And so, you know, time limits, limit contingency fees, limit punitive damages, limit non-consequential damages like pain and suffering, limit based on the defendant's culpability. Obviously, that's huge on asbestos as they're trying to find these defendants that only have just really tertiary involvement. Limit jurisdiction shopping. So then on asbestos, what I'll do here, since asbestos is something we might have a final exam question on, I'll do one quick review next class where we'll finish up asbestos. Really, it's a summary of the article we just read, so I won't cover through all of that. and then we'll get into workers' comp, and that'll finish us up for commercial insurance. So as you can see with commercial insurance, the really special case for commercial insurance is this concept of time. You do something today, and a person comes back 30, 40 years later and says, hey, you caused me a loss. Very unique to commercial insurance, especially commercial liability insurance, that we don't see in any other insurance. So it's worth to spend a little extra time on this.